Hello and welcome to the Can I Retire Now podcast with your hosts, Nick Russell and Becky Wagoner. I'm your podcast producer, RJ Malik. Nick and Becky, I see you both are ready for another great podcast. So Nick, why don't you start off and tell us what you and Becky will be discussing on this edition of the Can I Retire Now podcast?
All right. Hello, Becky.
Hi, Nick.
Long time no see.
Yeah. Here we are again.
So for those that don't know, I just leave the office in the morning. I leave home in the morning, come to the office, and Becky's like 30 minutes behind me when we do these recordings. So I just saw her 30 minutes ago. So this episode of Can I Retire Now, we're going to focus on small business owners. So I'm calling it Small Businesses, Big Retirement.
Ooh, catchy.
Yeah. As a small business owner myself, I think this is kind of a personal one for me. I have a lot of clients that are small business owners, and they run into a lot of similar issues when it comes to saving for retirement.
Yeah, something that used to probably be managed by a big company that had people for that now is, among other things, your job, right? You own a small business, now you own all the things.
You own all the responsibility. You're a funnel, and everything you taken care of by somebody else lands on you. So here we're going to talk about how small businesses and small business owners can save for retirement, even if they're just a one-person show.
Oh, okay. So just entrepreneurs. Let's help them.
Let's go. So why does retirement planning matter for small business owners?
Well, I'm sure the same reason it matters for everybody else. They want to stop working at some point.
Yeah.
Okay.
That's reasonable.
That's the long and short of it. Thanks for coming.
Thank you.
Okay.
All right. Appreciate it. And we're out. Well, and you kind of referenced it. If you're at a bigger company nowadays, most companies have a retirement plan.
Yes.
If you're a small business, which we're really talking about people or companies that are 100 employees or less.
Oh, okay. That's the definition.
Yeah. So there are, you may not have that traditional retirement plan already baked into the company. It a lot of times for small business owners gets pushed to the side for the day-to-day operational stuff.
Yeah. I mean, small business owners work really hard. And so adding another thing probably is not.
Yeah. Imagine you own a restaurant and now you need your food order didn't come in. Well, now you got to run over to Costco to get food. You're not thinking about, well, I should start a retirement plan.
Probably not.
You're worried about like next day's menu.
Yeah.
Right. So, it's just making sure you keep on top of, well, just like you said, kind of just another thing. But in previous episode, we talked about kind of retirement planning for the ages. If you ignore the beginning years as you're building your business, and then it's a lot easier to ignore it while your business is maturing, you're not actually saving for retirement.
So what are my options then?
Okay.
Are there different options for small business owners?
There are.
Okay.
So most people, we kind of generically always talk about 401ks because that's probably the most common retirement plan. Maybe you have a 403b, a 457, depending on where you work. But small business owners have their own slate of options.
Oh.
Yeah.
Okay.
So let's start with, and I have actually had all three of these in my career.
Personal experience. All right.
So I've been through every iteration personally.
Okay.
So the first one is a SEP IRA, SEP IRA.
And we don't mean September.
No.
Okay.
No.
What is a SEP?
So a SEP IRA first is best used by a sole proprietor. So one person that owns a business, no employees.
Oh, the IRA, individual retirement account. Yeah.
Yeah.
Okay. But what's the SEP stand for?
It's like self-employed pension.
Sorry, I put you on the spot.
You
okay.
put me on the spot. I haven't called it by its full name in like 20 years since my Series 7.
Well, I'm here to get to the root of things.
Make me look silly.
Okay.
So
this
is how people know, by the way, we don't edit the show.
Okay.
Because I'm not going to edit in and try to be smart like I knew that.
All right. So one person operation.
Yes. Or couples. So imagine like our friends across the street that are both realtors, they're married, they work together. That's okay that they're two people, but usually it's one or very few employees.
So SEP IRA, tell me about it.
Okay. So all of these that we're going to talk about function essentially like a 401k. You put money in through regular payroll deductions.
Contributions,
I'm sorry. Or in the case of some of these like a SEP, I have clients that do one contribution a year.
You just write a check and submit it. Okay.
But the nuances of them are really where the differences are. So a SEP IRA allows you to contribute 25% of your taxable income, or the annual limit, which this year is $66,000, whichever is less. So I'm going to let that sink in.
Yeah.
Oh boy, that didn't sink. That just bounced.
It ricocheted.
Wow. I was like,
okay, so
I'm just
trying to think. So 25% or 66 times 4, which didn't. That's what I was trying to do to see what your income was.
Oh, you
to
went
make
the
it.
other way.
Okay.
How about we just pick a number like 100,000?
Yeah,
You're making $100,000.
Okay.
You can contribute 25%, which is 25,000.
Okay.
So that is the most you'd be able to put in. Now the catch here is it is taxable income. So let's say you made $100,000, but after all your deductions and I had business expenses, you showed 50. Well, now it's 25% of the 50.
Oh, that's a real dilemma.
Well, good for you, because you want small business owners to just have their cake and eat it too. Man, I love you.
No, I'm trying to pay less taxes.
Yeah,
so you have deductions, but then you can contribute less.
Yeah, but you're still getting more deductions, probably.
Okay.
But less in your retirement account.
Yeah, that's what I was trying to get at.
The story here is there are cases where we actually have clients show more income, so we can contribute more.
I was going to say, yeah, that's what I was getting at.
So this is really where like an accountant and a financial advisor need to work together.
Okay.
And because a lot of my clients that have SEP IRAs don't know from year to year exactly how much they're going to make.
I mean, that's reality.
We usually estimate it throughout the year, like undercut it, put an amount in that we know we're going to have. And at the end of the year, when the accountant does the taxes, we get the final number, and then we basically fill in the rest.
Okay. So like quarterly, so if you say, I know I'm going to at least make 75 grand, so 25% of 70, whatever that is, you can kind of
20 grand
chunk it in.
So
Okay.
you put like $1,000 a month, knowing that you'll have a little extra room. And at the end of the year, you put in the final number.
Okay.
Works really nice. Again, for solo entrepreneurs, the downside to a SEP is if you have a SEP for your business, any contributions the employer makes to the SEP, they have to make to everybody's SEP.
Oh, what's good for the goose is good for the gander kind of situation.
So now,
okay.
Let's assume like here at Sunrise, we have eight employees. 8 employees. If I put $20,000 in my SEP IRA, I have to put $20,000 in everybody's SEP IRA.
Do the employer contributions count towards the 25% limit?
No, it's 25 per account. So whatever that a number winds up being, let's say I make 100 grand, that number's 25,000. If I elect to put 25,000 in my SEP, then that's the number. And that number has to go in everybody's SEP IRA.
Okay. I think I'm following.
Tell me if you're not.
Even if they don't make 100 grand, the other employees, but it's based on the owners.
It's based on my income and my contribution, and then it has to match everybody.
You're the employer.
Correct. So it's great when you're a couple, because let's say it was just you and me here. Let's say Can I Retire Now is his own business, right? And I put 20,000 in my SEP IRA. Well, now I have to put 20,000 in your SEP IRA.
Thank you.
But now as a couple, we just got to save 40 grand in a SEP IRA, where if I just did it for myself, I would have been restricted to the 20. So it's a way you can get more money saved if you are a solo entrepreneur. Let's say you own like a real estate, you own some investment property.
Yeah.
Well, now, as long as you're an employee of the investment, company, you can make yourself the owner employee, you can save in a retirement plan.
Nice.
Yeah. So that one's very easy for people that are like one-off. So think of like a gig worker, somebody that has an Etsy page that, they're selling stuff, or a small shop, but something that they do themselves and they don't have employees. The moment you have another employee, they have to get the same contribution you get. Not that I don't love my employees. I'm just saying
which could be good or bad.
That could add up very quickly.
Yeah.
So just be aware. So a plan that is better for people with employees is called a simple IRA.
Okay.
Simple, SIMPLE.
Yeah. No acronym there.
It is an acronym.
Oh,
Don't ask me what it stands for.
No way, really?
I have no idea what the acronym is, actually.
Okay.
There is an acronym for that. So simple IRAs, I think the only restriction is you have to have 100 employees or less.
So there's a limit. Okay.
There's a limit. But this really looks and feels like a 401k. So everybody gets their own account. Everybody can make contributions. The contributions are normally pre-tax. The contribution limits, the most you can put in, are actually lower than a traditional 401k. So I should have wrote this down in preparation for our show. But
Probably would have been helpful.
I believe the maximum in the simple this year is like 13,000 and change, 13,500, 14,000. But in a 401k, it's like 20,000. So there's a difference, right? Where you can't save as much. But let's say you're that storefront that has 3 young employees. Well, it's great because you can save, and then they can put in as much money as they want or not participate. That's up to them.
Oh, okay.
A requirement in that kind of plan, though, is that the employer must provide a match.
Oh.
Yeah. So the match must be, and there's a
match to what the employee is contributing, not necessarily like the SEP IRA. It was a match to what?
It wasn't actually a match. That was just
it wasn't a match, but it was a requirement.
Yeah, a contribution that was equivalent to what you were contributing.
Okay, but this one just says if the employee's in, the employer has to be in for the same amount. No, I'm getting it all mungled up.
Hey,
okay,
it's okay. You're not alone here. This is why we're covering this. So think about how a 401k functions. It's very similar in this case.
Yeah.
You're an employee. You put money in.
Mm-hmm.
If I'm required to match 100% of your contribution up to 3% of your salary.
I see. All right.
You put in 3, I match the 3.
Okay.
So,
and that's an election that the company makes.
Correct. There's a little nuance with simples where the easiest version is 100% of 3%. There's some rules around. You can actually do 1, 2, or 3%. But you have to do 3% 2 out of every 5 years.
All right, we're getting real nitty gritty. Better question is: this is something that a company can hire, like a financial planner, to administer.
Absolutely.
Okay, so you don't have to figure it out yourself. At this point, you can hire somebody to administer a plan like this.
And honestly, once you get to the point of having employees, so hold the SEP off to the side. If you don't have employees, that may or may not be, but probably reasonably the first place you should go. Mm-hmm. Once you have employees, just call a financial advisor and say, what would be the best plan for me? Is it as simple? Is it a 401k? Is it this? Is it that?
Okay.
Is it a SEP? And they should be able to walk you through the differences. And then like we run a bunch of simple IRA plans for clients of ours that are small business owners and have employees. And we go out to their place of business, the factory, the office,
and sign everybody up.
And we say, hey, do you want to participate? Here you go. We help them make their investment elections. We make sure they're aware that the company is going to match their contributions. So I love free money. So take that free money from the employer.
Okay.
It's a deduction for the employer. So like, we have a retirement plan here at work. I match for the employees. So, but the company gets to deduct that as a benefit compensation. And so it's pretty nice for everybody.
Okay, so we have solo people do SEP, less than 100. Simple might be best. And I'm looking at our notes here, and you wrote down a solo 401k in this.
Yeah.
Okay, what is a solo 401k?
Solo 401k. Some people call it individual K. There's a lot of names for it.
Special K. Yeah.
Special K. Yeah, with the strawberries.
Yeah.
So this is ideal for kind of going back to SEPs. Solo entrepreneurs, no employees, or like a family situation, as a like precursor maybe to a real 401k. So a solo K allows employee and employer contributions, which probably doesn't sound crazy to you, right? But a SEP, it's like the employer is contributing. It may offer Roth options. You can set it up so you can do a Roth contribution. And the limits are significantly higher. So remember the SEP, it was 25% of your income or 66,000, whichever is less. Here, it's just up to 66,000.
Oh.
So if you are making really good income or want to save more, or let's say you do the tax calculation and a SEP says you can save 10,000, but you want to save 20, you can open up a solo K and just put the 20 in. There's no 25% of your income requirement, right?
So why don't people just do the solo K?
Administratively, it's more expensive. Yeah. There's some fees involved in setting up a 401k plan and administering it. Like we've set them up for people, obviously. Yeah. And like a SEP IRA, you might pay like $50 a year in a maintenance fee. Okay. But a 401k has other requirements legally. So you may wind up paying $250, $500 a year. It might cost you $1,000 to set it up. Depends on the person.
You can save more. So it is ideal for someone that's maybe later in their career and needing to save more.
Yeah. I mean, just be long-term vision, right? Is it worth paying $1,000 today to be able to save infinitely more money and save that money on taxes? Or do you just pay $50 a year and you save less?
Okay.
And maybe not get your retirement goal. Like it's a slippery slope. So again, this is kind of like the Swiss Army knife of plans because you can do.
Oh, fancy. Okay.
This one, you can do a little bit of everything.
A lot more nimble.
Yeah. You can do Roth, you can do pre-tax, you can contribute more. You don't have to contribute every year. There's a lot of like really nice aspects to it.
How does someone set this up? They go to a financial planner? Okay.
Yeah. Just come to me.
Okay.
Well, not necessarily me. Sorry. You can go to a financial advisor. And independent advisors like myself. Yeah. Like we just access plans that are at, say, Fidelity, Vanguard, Oppenheimer.
You find the best fit.
We just say, what's the best option? And honestly, most of the time it comes down to two things. The investments available in the plan. So if you go with a big company like a Fidelity, they have great investments.
Yeah.
And then cost. So whoever's the cheapest / has the best investment options is who you should go with.
That we buy most things.
Yeah, right. I mean, it's not like Fidelity's offers something that Vanguard's doesn't. It's a 401k. It's the same structure. And since that's a solo K, it is probably worth noting it is different than like a 401k, a traditional one, which would be this. But if you have, say, 5+ employees. Once you have about 5 employees, 10 employees or more, that's where like a simple IRA kind of might blend into a regular 401k, a more traditional one. And again, just like the SEP to the solo, it's really just an administrative analysis. You look at it and say, okay, what's it going to cost me to set this up? How much money am I going to save? Do we want the features of a pre-tax or a Roth? But yeah.
Some kind of fuzzy edges around here, but a lot of options. It seems like you're not pigeonholed into one choice, which is nice. You can figure out what's best for you given your scenario.
Correct. So, and in personal experience, like I started as a solo entrepreneur here when I started Sunrise. And so I had a SEP IRA and I made contributions based on the limit I was allowed to based on my taxable income. And as the years went on, I got employees. And once I got employees, I went, well, I love them, but a simple IRA makes more sense. And so I started doing a simple IRA. So I was contributing, they were contributing, everybody was getting a match. It's all good. We started to grow. And from my perspective, as a business owner, I'm happy to share, I wanted to save more money, right? But partially you left the workforce and all that stuff. So I wanted the ability to save more than the $13,000 the simple IRA would allow. So I started a 401k here for Sunrise. And not a solo K. Like the whole enchilada.
401k.
And so I'm still considered a small business, but even in this analysis, I figured out that the cost of setting up the 401k versus the benefits to my employees and myself as the business owner and us saving for retirement outweighed the additional cost of the traditional 401k. So that is still an option for small businesses. But I think the average business that's 5 employees, 6 employees,
or just an individual,
it may be simpler, more cost effective, and easier to go with one of the other options.
Okay.
And then these options are flexible. You switch advisors, you can switch plans. It's just like anything else, just like your own retirement account.
Nice.
Yeah. So
you mentioned employers may decide the benefit to offering a regular 401k or retirement is worth it. And that relates to my, did you know, fun fact, trivial.
First of all, you came up with a fun fact for a topic that you admittedly know very little about.
We're really playing fast and loose with the word fun here, but it's interesting nonetheless.
Are we playing fast and loose with the word interesting as well?
Maybe, okay. But stick with me here.
All right, let's see.
So according to the Pew Charitable Trust, they did a study.
I'm sorry, to who?
Pew Charitable.
Pew, like
Pew Research.
Like it stinks?
Not Pew-y, but like Pew Research. Okay. Anyway, the U.S. Bureau of Labor Statistics, which I love.
Yeah, you love a good labor and statistics.
Is reporting that actually 57% of private companies with fewer than 100 workers offer a retirement plan as of 2023. So the majority of small business owners are getting on board with offering a retirement plan.
And I would tell you, if I had to take a guess, I would have guessed less. I would have guessed less than half. So that's nice to see. And I think, and these options that I know we try to just kind of touch on them, and that way, because everybody's situation is a little different. If you have questions, you reach out. But I think the advent of these different options is giving more entrepreneurs and more small businesses availability to try different things.
Oh, for sure.
That's great.
And the reason, according to this study in 2016, they found that the reason 89% of the small businesses offer these is they actually found it helps retain their workers. And we all know turnover costs money. Yeah. So it may be better in the long run.
I will tell you, that's something that advisors have said for years. Like, you got to, help your employer, help your small business clients, tell them it's retention, 100% retention. People always talk about the number one reason they leave an employer is they say compensation. So most people think that's wages. They're not earning enough money. But it honestly is things like
it includes benefits,
retirement plan, and health insurance. And that's so important to people.
So it says employees with access to an employer-sponsored 401k plan, which is one of the things, are 1/3 less likely on average to leave their job within the first year. So it definitely plays a big role. So I think it looks really cool to see that a lot of small businesses are getting on board, and they're seeing the long-term benefits of offering it not only for themselves, but for their employees, which we all know just makes a business hopefully grow.
Yeah. So. And can I interject?
Yeah.
Because you just made me think of something as you said that. I think if there's small business owners hopefully listening to this and they say, well, that's great and all, but I reinvest my money back in my business. Right.
I mean, that literally is what you would be doing, though, if you had to pay a fee for. Sorry. Continue your thought, though. Invest it back in your business would be starting a retirement plan for your employees.
I see it that way. But let's say we own a mechanic shop and I'm a mechanic and I go, well, I need new equipment, or I need this. I need that. And they don't go as far as saying, well, I'm going to offer this as a retirement plan. And I've been through this multiple times with multiple clients where they don't make it a priority to save money for their retirement because they plan on selling their business as part of their retirement retirement.
Okay. That makes sense.
And it's no different in our industry. Like, advisors as they age, like any doctor or mechanic, you then find usually a younger person to take over, and you sell the business to them, and that's your retirement plan.
Yeah, you get a big check at the end.
Yeah, and don't get me wrong, Sunrise is a nice asset in that way for us to have.
Yeah, that works.
But there's no guarantee someone's going to be available to write that check. Right at the end of the day, if you own a mechanic shop and you want $10 million for it, there might be a limited amount of mechanics coming up that can write a check for $10 million. So if you're dependent on that, here is a way that you can build value for your retirement that is separate than the entity itself. You have investable market assets. And then if you wind up needing to it's like selling a house. I want to sell my house for $1 million. Well, it sold for $800,000. Well, that $200,000 is not there that you expected.
Yeah.
So if you wind up having to sell your business for less, or it's harder to sell, or hey, with enough AI and development, your business isn't really a thing.
Relevant anymore. It ages out.
Yeah. I mean, all of a sudden, that's your entire plan was to sell the business and then retire is very risky. So socking some money away, making sure that you take care of your employees so your business continues to grow, but you take care of yourself and you put money away. So that way, if retirement doesn't happen the exact time you think,
or the exact way,
you have a little more flexibility. And
that's a good point.
So that's why, even though that, I own Sunrise and eventually will retire, maybe, I don't know. I love what I do. We'll be doing this till we're old and gray. But we also save in our retirement accounts, and we also put money aside for ourselves. So I just want to make note of that, because that's sadly something people go, well, this sounds really nice, but I'm busy running my business.
Yeah, but I have a plan.
Yeah.
And the truth is, it doesn't hurt to make a couple plans.
Yeah.
Have options.
Yeah.
Okay.
I think so.
All right. So lots of different options for small businesses and entrepreneurs, but the important part is at least pick one of them.
Yeah. And based on your size, your predictability of income, amount of employees or not, how much money you want to save. We use those to kind of narrow down which one of these plans makes the most sense. And just know that your business is likely to evolve. A friend of ours who's a realtor who, he's making money as the year goes on through commissions. It's not predictable month to month, but maybe relatively predictable year to year. But if he doesn't have any employees, well, all of a sudden maybe a SEP makes sense or a solo K makes sense.
Yeah.
If all of a sudden, me, I have employees, well, a simple IRA or a traditional 401k might make more sense. So I thought of this, and I wrote it on this piece of paper here because I thought
let's hear it.
It sounded like such a Becky thing to say.
Oh no.
But I didn't want to give,
Is that a compliment? We'll find out.
So for my small business owners, don't wait for retirement to sneak up. Plan like a boss, like the boss you are, because you're a small business owner.
I get it. That's good. I appreciate it, babe.
I'm glad you appreciate it. I think everybody listening would rather have heard you say it. You have a way with goofy things you say. But so SEP IRAs, simple IRAs, solo Ks, 401ks. Honestly, this could be for everything from a gig worker to a realtor to someone that owns a yoga studio to even financial advisors that are listening. You might be surprised. Other financial advisors listen to our podcast, which is amazing and a wonderful compliment. But if you're out there on your own and you have your own business, you should know better. You're a financial advisor, but you can open one of these plans and start saving. So
it's awesome.
So for our small business people, if you have questions, you can find us on social media. You can find us on the website, sunrisewealthadvisors.com. We have a questions box there. We're also releasing some new material and stuff that'll be coming out as well, available on the website. So stay in touch. Thank you for listening. Becky, I appreciate you. You're wonderful.
Back at you.
You're my favorite small business owner, I know. And thank you for listening.
Yeah, have a great week, everybody.
Yeah, we'll see you next time.
Thanks, Nick and Becky. Looking forward to your next podcast. And thank you for listening to today's Can I Retire Now podcast. Until next time, for Nick and Becky, I'm RJ Malik.
Thank you for listening to the Can I Retire Now podcast. Click the follow button to be notified when new episodes become available. Visit our website at www.sunrisewealthadvisors.com or give us a call at 407-351-3476. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Can I Retire Now? The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. The views depicted in this material are for informational purposes only and not necessarily those of Cetera Advisors. They should not be considered specific advice or recommendations for any individual. Neither Cetera Advisors nor any of its representatives may give legal or tax advice. Securities and advisory services offered through Cetera Advisors, LLC, member FINRA, SIPC, a broker-dealer and registered investment advisor. Satira is under separate ownership from any other named entity. 6052 Turkey Lake Road, Suite 101, Orlando, Florida, 32819.